And there we go. I think we've begun recording. So I'm Tim Quast from Market Structure Edge. Thank you for being here. With me is Brian Wilson, market strategist. It is October 10th already, and this is the Market Structure Edge live demo and discussion. Look, we just gather pretty informally. We try to do this every week and help you use the analytics to best effect. It's another beautiful day behind me in Steamboat Springs, Colorado. This is just a great time of year here. The color is kind of peaked, but don't
Mhm.
don't tell anyone. Just don't, let's keep that secret. Okay, so since I bleated on interminably last time, taking all of Brian's time, I will bat cleanup today. And so Wilson will kick us off, and whatever time he leaves to me, if any, I will. I want to talk about trading during periods of high uncertainty. Before that, over to Brian Wilson.
Perfect, perfect. Thank you, Tim. Good to see you all. I actually have a puppy down below me right now. Our daughter's puppy is about 3 months old. So if you hear any whining, it's not me. I'm not worried about the market. There's nothing going on. There's just a puppy in the room with me right now. But yeah, did want to walk through a few ideas, a few thoughts. Some of them you'll be very familiar with, but just kind of walk through the process. And Henry will do this with you occasionally, so I thought I would do, part of my process as well. So I'll go ahead and share my screen. Similar to what many of you guys do, one of my first looks every day is quite simply just broad market sentiment. So I'll take a peek at what's happening from a broad market perspective. I want to get an idea, what's the big picture trends, that I'm going to kind of paint my trading around. So I'll see, are we above the red line? Are we below the green line? Is market sentiment declining? What's happening with short volume? So I try to incorporate that every day. As I do market desk notes, or Tim or Henry, you'll see us, speak into that as well. And then what I'll incorporate, and there's a few other things, but I will, take a look at the daily trading ideas. How many names are in momentum? 13 names today. How many names are in low volatility? There's a lot in low volatility right now. Sometimes that can paint a picture of what market participants are presently doing. But as of today, 30 names in low volatility. What I will do then is I will sort the names by probability, and depending on how many names are, I like momentum. If possible, I like to trade momentum names. So I'll usually go down to 80%, 85%, something like that, depending on how many names are in momentum. And then I'll usually grab maybe the 100 percentiles from low volatility. Similar to many of you, I'll just drop those in a watch list. So, here's my trading ideas for today. These are actually the ones that I acted on this morning. So, trading coherent, I actually already got out of that name, made about 80 or 90 basis points, and then I'm in three low volatility names. Now, one consideration when we're looking at some of these names, either in momentum or low volatility, and I think Tim brought this up a few days ago. I'm quite simply looking, are they in the range? Are they in my entry low to entry high? Let's say it's CCJ. I'm looking for it somewhere right around, $50 if possible. Now, here's something to think about. If you have it in your portfolio, that morning portfolio watch list, and it's suddenly trading at 48.50, and you don't see any news, maybe that's a pass for the day. If it's below your low entry point, sometimes there's a reason for that, and sometimes it's just good to just leave that one alone. Some of the recent Chinese names, fell into that category. I believe it was yesterday. The whole lot of them were down, 4 or 5% at the start of the day. I just deleted them all, didn't even look at them. So that would be my recommendation. If you see them well below the entry low, just get rid of them. Don't look at them, that particular day. There's usually a reason, why they're trading in that manner. If they're between your entry low and entry high, that's usually just a really good entry point. Great opportunity to trade. I did mention briefly this morning about inflationary effects of ETFs, and let's just have a short discussion about that. Tim, you're welcome to add to the discussion if you would like. But we just have a slide deck here having to do with some of the big picture trends in the market right now. Most of the money is in the Russell 1000. 85% of the Wilshire value is in 443 stocks, 98% of it in about 1,600 stocks, and 95% of the Russell 3000 is only in 1,000 stocks. I think you've seen this slide before, but what's happening? Well, over time, active money continues to lose money. So active investors continue to lose money. Passive investors continue to gain money. And that trend just continues. And you can see how that plays out in what we'll call the Wilshire 5000, kind of misnamed for a period of time. We had roughly about 7,500 stocks in that index for a period of time. That has moved down to, let's call it 3,500. Many of those are so small, they're not even worthy of trading. But here's the takeaway: over time, more money continues to chase fewer goods. The big get bigger, the small unfortunately die. We've tracked probably 100 companies in our database this year. We've gone from tracking about 3,100 companies down to about 3,000, and you just continue to see this consolidation. The market concentrates into the largest stocks. We're well aware of that, the Apple and the Microsoft example. So we have roughly about 3,500 companies, and to the best of search capabilities, I was looking for the current number of ETFs. It's somewhere around 2,000. So we have around 2,000 ETFs chasing about 3,500 stocks. Many of those are very illiquid and don't even fall into the category of being worthy to invest in. So it's inflation. We continue to create more ETFs chasing fewer stocks in the stock universe. What does that tend to do? Well, let's look at the last couple of months and we'll see, a great example of that. It's hard for if you want to short the market, it can sometimes be a little bit challenging. Look at August. We had rapid decline in the market. The market got oversold, got quickly bought. We look at September. I believe that was 4% declined over the course of the first 4 or 5 trading days, quickly got bought. We look at October, the same trend played out, and so far that same trend is in play as well, where the market is once again getting bought. What's the point here? Well, as long as ETFs continue to do what they do, you just don't see that much in terms of downside over time because the market will get oversold. ETF models will need to buy shares and the market will recover. And that's part of the inflationary overall effects of ETFs. Tim, did you want to touch base on anything there?
No, I think you've got it just right.
Okay. Sounds good. Yeah, I just wanted to touch on that point. And it makes the point once again sometimes why it's so difficult to short the market because not only is inflation in effect for obviously our economy as a whole, but it's generally in effect for the stock market. Did want to touch base on earnings season and give you an example of where we're at right now. And I mentioned this this morning in terms of like a sub portfolio that you can set up. You all have access to the sector portfolios. What I've done for a lot of the main sectors is I've set up, I call it subsectors. And I just take the largest ones, and let me give you an example. If we're looking at the financials, and you can sort it by market cap and go down however far you want. I think when I did it, I went down to about 100 billion, something like that. So, you just sort grab the ones that you want from that list, and then you get kind of a component of the larger companies. They tend to move first because more money's going to either be flowing into or flowing out of them. And look at the financials as an example. As we come into really the start of earnings season tomorrow with some of the big financials, look at what's happening in terms of short covering. We're getting some very significant short covering, and we're getting demand that is stabilizing. We would conclude that market participants are bullish right now. They're bullish going into the beginning of this earnings season. Now they may be right, they may be wrong, but that's the setup right now as we come into earnings season. Let's look at this from a couple of other angles. This is the big financials once again, kind of getting things started off tomorrow. Take a look at what's happening with broad market sentiment. We haven't yet, come to a bottom in terms of sentiment. We're getting closer. We can see we're down to 5.3. That rate of decline starting to slow. Here's one trend that we are seeing. Just like the financials, we're starting to get a little bit of short covering across the market. And if I look at some of my sub portfolios, here's my all equity look, short covering, Dow Jones, short covering, FANGs, short covering, large cap, short covering, mega cap, short covering. You get the point. It's persistent pretty much anywhere you look right now. If we look at what's happening with big tech, similar, just starting to get a little bit of stabilization in terms of sentiment. And once again, shorts are just starting to get covered. So just wanted to paint that picture ahead of the beginning of earnings season. I also wanted to include an example. This is a possible trade you can make around earnings. It does take a little bit of work, but let me explain what I will sometimes do depending on if I have the time. And let me go over to the NASDAQ website. So every day, the NASDAQ, and this is just a look at their earnings. You can just type in, earnings tomorrow and go to the NASDAQ site. What it will show, and if we're looking at it for today, and you can see down below, and there's probably other sites that do the same thing. You can see whether a company's reporting pre-market or after hours. And so here's the point. I would drop some of these names into a portfolio. I would drop in my after hours for today, and I would drop in my pre-market, for tomorrow. What that looks like then, and as I mentioned, it's just a simple portfolio. When we get into the heart of earnings season, I think I grabbed them all for today. But there would be 7 to look at with today's trading. Here's the trade, and I'll briefly explain it. You're looking for outliers, and what you're looking for is potential volatility. It's an options trade where you're buying at the money puts and calls. And once again, you're looking for volatility in the trade. And I mentioned you're looking for outliers. I don't know if I have any great examples today, but let's say that Fastenal was a little bit of an outlier. And specifically, I'm just looking at short volumes. I'm looking for either extreme short covering, or I'm looking for short volumes that are, 80, 85%, whatever. So we look at Fastenal. I probably wouldn't trade this. It's a little bit above its norms. I'm looking for something that's, way outside of its norms. And I pulled a couple of examples before the call here just to give you a thought. Let's say that Interdigital was reporting tomorrow. Look at that move in short volumes. So if they were reporting after the bell today, and I don't know the options chains for Interdigital, but you're looking for outliers. You're looking for extreme outliers to the upside or extreme outliers to the downside, and you're looking for very liquid stocks. You don't want to get into things that are illiquid. It defeats the purpose of the trade. But this would be an example if this was truly liquid. Let's look at an example on the other side. And you can look at the just extreme short covering. So if this company was reporting tomorrow, short volumes of 6.5%. Once again, you're looking for volatility. If you don't get volatility, the trade doesn't work. But that's just an example of one way that you can trade around earnings if you like to trade options. Once again, just grab it from a site. NASDAQ is a good one. Drop it into a portfolio. I'll go back to that earnings portfolio that I set up today. Once I get there. And once again, what I would do here is then just sort it by your supply. And once again, you're looking for outliers. If I was pulling this up today, I might check Fastenal, I might check Wells Fargo. I don't think I'm going to get any volatility from either one of those trades. Today would be a pass. But that would be an example of what you would do. Once again, looking for that volatility itself. I'll give a short kind of what I'm looking at as we look ahead, and then I'll hand it over to Tim. I mentioned the short covering already that we're seeing across the market, and really that's the look right now. Let's watch to see if sentiment truly does stabilize. I think it will, but I think is not a trading strategy. So let's see what the data gives us. And let's watch to see if short volume continues to move lower. Really that's the crux of the issue. And if we look at it from a big picture perspective in our big tech portfolio, we're seeing similar trends right now where sentiment once again is stabilizing, short volumes are moving lower. Does that trend continue? So it's a pretty easy look ahead for me. I think it's a bullish look right now. I always want to listen to the data though, so I'll just continue to watch the data there. Tim, I'll turn it back over to you.
Okay, thank you very much, Brian. Appreciate you doing that. Let me share my screen, and I will offer a thought about where the market's headed to. It will dovetail with this really one topic that I want to talk about today, and it's trading in periods of uncertainty. And here's what I mean. You could look across your dashboard. We've spent a lot of time looking at broad sentiment, but let's do that because it's helpful. If you look what happened here, the turning point for the market often comes at options expirations, and there was a strong move up in demand, and supply it declined off of a peak. I mean, it spent a lot of time at 50%. That's an element of uncertainty. But here you would say, well, I'm pretty confident that stocks are going to rise under these conditions. And so that's pretty easy. Those are great opportunities to don't trade. You don't have to. I'll talk about trading the market short during periods where there are opportunities to do that. And I think they only happen a handful of times a year. The turning point though came. Let me finish the thought. Here's a great time to use daily trading ideas. Just use those, and you're very likely, 68% of the time, you're going to make 2% or more in stocks from the momentum portfolio. Set your stops appropriately. It's very easy to get frustrated by having your stops taken out. And that's a key thing during periods of uncertainty. And if it happens to you, if you put if you said happened to me today with Reddit, and if it happens, look, that it's gonna happen 32% of the time, give or take. It's just a matter of math. And if that happens, then you just move on. But during this period of time, the likelihood I didn't have any stop outs until CSX in the last 4 or 5 days, all the way back to, I don't know, it was sometime in the summer. Because if you're very careful about trading only these periods where look at the strong demand, I'm probably not going to get stopped out. If I have a 2% below my entry point, and I'm looking to make two, maybe a little bit more. I mean, in a period like this, you might just let it ride. I think it's always good to take your gains, but when you know demand is working for you, demand's rising, supply is not, probably you're going to make money. Where is the turning point? Well, you could look at each of the last 3 months running, and it's with month-end options expirations. This is a big swoon for the market. Here it happened, the market declined. And here, the market moved sideways. It was supported by declining supply, so it made it a little mushy in here. Generally speaking, the market has done exactly what the data indicate. It's been difficult to get a strong direction since month-end options expirations because supply has declined at the same time that demand has. Period of high uncertainty. Well, what do you do under those conditions? You could say, well, demand is falling. Wouldn't this be a good time to short the market? I made a little bit doing that using SPXU and UVXY. Thank you, Brian Wilson, for that. But the gains were generally pretty small. And that is the core takeaway. In periods of high uncertainty, take your modest gains. I reduced the range that I was expecting in BEKE today. And I took my 1.5% instead of 2, and it's a difference of a matter of 20 cents. Well, in periods where you don't know, can I tell you what the market is going to do when supply has risen? Now it's begun to, one day is not a pattern or a trend. It ticked down. I don't know what it's going to do, right? That's uncertainty. Demand has come down to 5.3. You could probably, if you ran a trend line on that, you'd say, well, it's probably going to go to 5, but it might not. Depends on what happens today. It's uncertain. Well, you can't count on trading the same way that you can when there's strong demand and supply is not keeping pace. That is absolutely going to give you returns. And if you're trading momentum stocks with at least 3% volatility, the market is incredibly volatile. Look how much Reddit moved today. Look at BEKE. Look at the whole market. Look at UVXY. Look at SPXU. I mean, the amount of volatility, and two of those are leveraged instruments. They're going to have 3 times the volatility, but it is remarkable how much the market moves around. That is what we're taking advantage of. And there are periods where it's very easy. I say it's not hard to do this. The hardest thing is getting out of our own way because we are uncertain. We say, well, what if do I have it in the right spot? Do I have my stop in the right spot? Did I make the right decision? Should I wait? I mean, do I wait till later in the day? I don't know what the market's doing. Oh, the market's starting to deteriorate. Maybe I should get out of my. That's what we do to ourselves, right? That's where we undermine the effectiveness of the math. You could go track this over and over and over. CSX that I was stopped out of. You bought it below that stop, you've made your 1.5 or 2%, and it's a low volatility stock. The math almost always works. What undermines it is our uncertainty around how we're going to play with this, and you want to look at it, and that's what we do. So I think in periods of high uncertainty, it's pretty clear what you do. Cut your expected returns in half. That's fine. To make 1% if you're trading $50,000, you do that over and over. Boy, is that a nice way to trade. And I am very happy when I'm doing that. I get in my own way too, periodically. I probably could have done. I didn't let Reddit come to me. So then when I put a fairly shallow stop in it, and I got stopped out. Well, I didn't follow the math. If you follow the math, probably going to work. Doesn't always. A third of the time, you're not going to get your return, or you're going to get stopped out, one of the two. But that means 2/3 of the time you're going to make the return. And if you add those up over time, it means you have a positive return on average all the time. Doesn't mean every day, it just means overall. And so in periods of high uncertainty, that's what I would say. Shorten your horizons. How long is it going to be before we know what direction the market's going to go? Look, I don't know. There are factors influencing the market right now of such enormous size that are outside what I would say, either the fundamentals or technical signals. I'm not a fan of technical signals because I know that Citadel is setting those, and Citadel wants to fool you. Algorithms are designed to deceive, but the market is being affected by monetary policy and data inputs. This is what happened here. I talked about this before. You have very high supply and declining demand, and then the market took off through options expirations. And what happened in here is a 50 basis point rate cut. And so those things affect how people bet. And the derivatives, they're mushy. I mean, they're an input. We measure it with risk management as a behavior. It's not a perfect read because those things are implied. It's just implied. And so something that is implied, if prices change, can immediately go away or immediately be used. And so it has an outsized effect. And I think you're seeing that again here. If you have, why would against falling demand and a 2-3 day rise in supply, would the market rise for 2 days? You'd say, well, that's a statistical anomaly. No, it's really not. It's not a statistical anomaly, but it does reflect the fact that there is an awful lot of use of derivatives because everything is uncertain. And so it's going to make it more challenging to have a good directional trade. Yet it's as plain as day that that's the case. Right? If demand is falling, things are going to be harder. It's going to be harder to produce a return. It's not falling sharply enough, nor is supply rising sharply enough to give a good short bet. As I said, I'll bring it back around to what's ahead. I have made money just a little bit shorting the market in the past number of days, but it's not been easy. Not like when there's a clear supply demand convergence that creates a great opportunity to short the market like we saw in early September. That's where I made a great return. Now, looking ahead, well, we've got options expirations next week. Are we going to bottom right into those? I just don't know. I can tell you, I don't know what this data setup indicates, and that's okay. I mean, if you don't know, then that should inform what you do as a trader. Make sure that you're not making big commitments. I think these are times where you could take a late day position and have a higher probability of producing a return fairly early when machines are trying to figure out where the volume weighted average price is going to be for the index funds and ETFs that need that reference price at the end of the day. But you really have to have short horizons and modest targets until we have a clearer view of what the data indicate. But that's fine. It's a great way to protect yourself and produce modest gains with minimal risk. Okay, so I'm going to stop there. And questions, comments, observations. Brian, you can feel free to weigh in.
Yeah, Tim, two items to talk through. One of our users had asked before the call if you would talk through our broad market sentiment tool. Obviously, it's an algorithm. What can you tell the users in terms of how it's produced, what goes into that demand feature itself?
Yeah, I can't remember exactly when we created this, but it was a long time ago. I mean, a dozen years ago anyway. And the reason we can do it is because of Regulation National Market System. Reg NMS automates the market and forces everything to trade between the best bid to buy and offer to sell. And all the markets are connected electronically so that marketable trades can flow to wherever the best price is. Well, that creates a great opportunity for us to modulate whether there's more buying or selling. Here are the components of this. So the gray part of the graph is SPY. We're just using the proxy for the S&P 500. Very easy to use an ETF for that. Then the green part of the graph, this algorithm called market structure sentiment, has effectively 5 components. There are 4 behavioral components and a price component because behaviors affect prices. Prices have a propensity to navigate toward the average because what lies between the bid to buy and the offer to sell? Well, some form of average. It could be a midpoint, could be pegged, could be floating, it could be time weighted. I mean, over the day, I'm going to try to get myself near the midpoint to fill a certain size order. A lot of algorithms do that. Volume weighted. All of the exchanges offer order types that are designed they're like hide, slide, not slide, to stay right there as prices move past. I describe algorithms that are filling orders around the midpoint as a cheese grater. The market moves up and down and up and down, and all the baskets are moving up and down as Citadel takes a tenth of a penny against the bid or the offer, one side or the other. And then the cheese grater slowly fills the order around the midpoints, right? Well, that we can use. So we track how things behave relative to midpoint, and then we construct 4 behaviors. You could come up with something else, but through observation, it was apparent to us that there are 4 big motivations in the market. Again, you could call them whatever you want, but there is story, stock picking. That's going to be driven by valuations. There are valuation metrics if you are focused on corporate fundamentals, and that's all you hear on CNBC. But the problem with that is money focused on characteristics. That's the next big group that we're going to monitor. BlackRock, Vanguard, and State Street do not have valuation metrics. They have allocation targets. That's it. That's why valuation metrics are a lousy measure for today's market, because passive money is 250% larger as a daily volume force than is active stock picking. Then you have machines or price. The high frequency traders have an investment horizon of a day or less, and all they're after is changing prices, and they're going to consume all the data and know more than us. So always know that if you're trying to figure out where to be intraday, you're likely to be wrong because they have better data. What we can know is volatility. That's the range that the machines have already given us. And they're going to use his trailing data too. 4th group is risk management. Trades tied to derivatives like puts and calls, and there are an awful lot of, let's just call them broadly, contracts for difference. Is there a fixed for floating return? Is there a swap? Is there a net return on a portfolio? That stuff is massive in the market now. And so those things are all forms of demand, and they wax and wane, and we measure it mathematically. And that is this setup. Is it perfect? No, but it's a very good way to understand whether demand is increasing or decreasing, because it reflects the way that the market works today. The market is mathematical. It is a data network. Traffic, waxes and wanes on it. People's minds change, models change, machines come and go, derivatives get revalued. All that stuff is an input, and it's not perfect. But in a 5-day increment, it is very, very accurate. 10 days, it's half as accurate. That's why we're always looking at the data every day. Supply, again, for those who don't know, short volume is the data set associated with Reg SHO Rule 201, the modified uptick rule in place since 2011. Brokers have to report, are the shares involved in this trade owned by us or by our customer? Are they borrowed or are they exempt? And for market makers, exempt isn't a good category. It's like 50 basis points of trades. Market makers don't have to locate shares to short. They make markets, and they make them electronically. And at the end of the day, they look and they see where they're long or short. So we're capturing all of that. Again, it's not perfect, but that's what this does. And if you look at this, you would say, well, there's going to be that no one knows what's coming next, and it's manifesting in the data. I always like to go look at SPY too. SPY is a good. And is there another question too? That's a long-winded answer, but now
Yes. One question from David, who's an IB customer. He's wondering, as an IB customer, if they're getting all the benefits through IB, or are they missing some benefits and tools by not signing up as a customer, with Market Structure Edge?
Okay, I'll answer that quickly and then we'll wrap up. But before I leave this, here's SPY. Only ETF we put on the platform. ETFs are substitutes, so if we put them all on there, we would have no read on supply and demand. But this is a good proxy. Notice a 10% move on the supply side yesterday in SPY. It's another sign of uncertainty. I mean, if I'm using SPY as a hedge because I don't know, equities have posted a really nice gain. man, are they going to give some of that back? Well, that's, it's going to manifest there. To IBKR. So here's what we share. We only share a piece of the, that could change. But currently we share daily trading ideas. And so it's not going to give you the ability to build portfolios, to see sectors, to see what all the money's doing all the time. It will give you momentum trading ideas. It'll give you low volatility trading ideas. If you click through one of these, then you can see broad market sentiment. And this, look, I use it on my phone through my Interactive Brokers account. If you're using your mobile device, you can click on the lower right markets, scroll down, and you'll see Market Structure Edge, and I'll go look at daily trading ideas like this. But here's broad market sentiment. It's going to be there too, just like you see on the platform. No, but it's just a piece. It's just a piece of what we offer through the whole platform. Okay. Now I'm looking for some deep, meaningful, departing words of wisdom. That's what we need. John Cook, you got anything? Benham, you got anything for us? Barry Norton, I think I saw you somewhere. Gary Morris, country music singer. You guys got anything? Cindy, thanks for the kind words. I love our tool too. I think it's really awesome. It's not widely known yet. Will it be? I don't know. We're at an inflection point with IBKR. I'll tell you in the next month. We've had some pretty interesting discussions with them about what we might do. But it's a unique tool. There's nothing else like it. All right, then let's wrap it up, and we'll do. Oh wait. Thank you, Benham. Okay. Thanks, Gary. Good to see you guys. All right, so we'll do this again next Thursday, and we'll see where we are. See what the data say. Thanks for joining today.